So welcome back traders to another Liquid FX YouTube video. Here we're going to be going over the power of three, and in particular we're going to be going over the power of three concepts from NFP last week on ES. So this is the E-mini S&P 500 futures contract. So this can be applied to the index, the cash index of S&P 500, but here we're looking at the futures market. So last week on Friday we had NFP. NFP was this aggressive move down, right? So we had a very aggressive move down, and that is going to be labeled over here. So this was our NFP move. Okay, so NFP here created a very volatile move in price, and our job is to trade after NFP, right? So this movement here was our NFP. Now, when it comes to trading NFP, the only secret that we have as traders is to trade after NFP, because here's where lots of blown accounts happen. Funding companies come out and say, oh, these many accounts got blown, etc., etc. So your job is to make sure you trade up after the NFP news release. Okay, so how can we use NFP to our advantage? Okay, so first of all, let's go back and have a look at let's go back and dissect how the day's price action unveiled, right? How did price actually deliver itself that day? Let's understand conceptual standpoint. Okay, so first we start off with the Asian range as always. So here we have the Asian range. So the Asian range here is in orange, as we can see. Now, what does the Asian range represent? Let's discuss a few things about the Asian range. So the Asian range here in orange has a few jobs. Its main job is to build liquidity, right? So the Asian range builds liquidity, and hence we call it the accumulation. You can almost look at it as an accumulation of orders. So the Asian range is an accumulation of orders, right? So it builds liquidity, and the 2 points of the range that we're going to be interested in as traders and as analysts are simply the Asian high, marked out with one red line, and the Asian low, marked out with another red line. Okay, so the Asian high and Asian low are our to-go-to points when it comes to understanding manipulations of this range. The high and the low are important. Now, another question I get a lot is, oh, what are the timings of the Asian range? What time is the Asian range? Well, so is the Asian range is from 8 p.m. to midnight New York time, or Eastern Standard Time, right? So wherever you are around the world, it's important to calibrate this to whatever time zone you are around the world. That's very important for you to do. So the Asian range is from 8 p.m. to midnight New York time, and its prime purpose for our style of trading is that it builds liquidity, and we call it the accumulation. Okay, it is the accumulation. Now, as we go into the London session, right, what do we see? What we see is we see a very typical move where we see price sweeping the Asian low and the Asian high. Now, the main thing we're going to be interested in here is the rally up before ES opens. So ES opens at 9:30 Eastern time or 2:30 p.m. London time. So what we're interested in is we're interested in dissecting what the market does pre SPY open, right? Pre-open of the S&P 500, right? So what we're essentially interested in is this move here. So this move here in yellow, if I label that in yellow, we're interested in understanding what price achieves with this wick over here. What does price achieve by this? What's the purpose of this, right? Why does price do this, and why are we interested in this? So the London session and the pre-New York session prior to the open gives us a rally to the upside, right? We understand there's a rally to the upside over here. This is a rally to the upside during the London session and pre-New York session. So what does that represent, and why are we interested in this? What does this move here represent? This rectangle I've drawn over here. So what we need to understand is that London is a manipulation phase of the market when it comes to S&P 500. These same concepts are applied to NQ, even US 30, right? So this is a manipulative piece of price action. So when we see price sweeping the Asian high before aggressively giving us our sweep of the Asian low in the NFP session, right? We need to understand that this is early enticement of buyers, right? Because we understand in the higher time frame we're bullish, right? So what we see here is we see an early enticement of buyers, okay? And I'm going to draw a schematic to help explain this even further, right? So we see an early enticement of buyers, right? So what we see off the gate is that we see something similar to this, right? Something I've gone over in previous videos. So when we have a range, typically the Asian range over here, when we see price rally up, what do you think buyers are going to be doing in this region? Right, so if we have our Asian range in orange, what does this move over here represent? Why are we interested in this rally to the upside? So this rally to the upside represents an enticement of early buyers, right? Early buyers get in, right? This is where early buyers enter the market. Now, our job is to understand that and be aware. And there's a few things you can do to avoid that. Now, this was a Friday, so of course we had NFP, first Friday of February 2024. So we had a very large move to the downside. So already your way of avoiding this is to wait for high impact news. You want to trade after high impact news, right? So the way to avoid being an early buyer typically when it comes to these high impact news days, because we're going over NFP, is to trade after the news, right? Trade after the news, right? This is very important, and the amount of accounts you can save, or the amount of losses you can save yourself, or the amount of money and mental stress you can save yourself just from this simple concept of not even trading but discipline will take you will really help you fulfill a lot of your trading goals when it comes to improving your strike rate, reducing losses, etc., etc. So it's understanding that you want to trade in line with the higher time frame, but after news events. So it's reducing the idea of FOMO, because you don't want to enter during a manipulation phase, right? Because you're just going to be one of those early buyers that gets enticed and then taken out the trade, right? And you don't want that. That's not what you want. So, and that's exactly what the London session did here. London and pre-New York Open, right? Pre-open of SPY. This is an enticement of early buyers. Now, of course, we have the infamous NFP, which does the exact opposite of what London does. We see an aggressive move to the downside, a very, very aggressive move to the downside. Okay. Now, NFP does what? It sweeps out those early buyers quite aggressively. So we see a sweep of those buyers out of the market. But what else does it do? What else does it do? It does the opposite of London. So it entices, not buyers this time, but sellers. Entices sellers. So what we see over here is we see price giving us a sweep of the Asian high, enticing buyers, and then we see a sweep of the Asian low, enticing sellers. Now, we understand that SPY hasn't even opened up, right? And the S&P 500 hasn't opened up, and the S&P 500 doesn't open till 9:30 Eastern Standard Time or 2 p.m. UK time. So this chart in front of you is calibrated to UK time. And where does the S&P 500 actually open, right? So let's just draw a line to delineate the opening price of SPY. So SPY opens at 2:30 in the afternoon. So this red line here represents the opening of SPY, right? So we need to understand that we're only going to be looking to be an active participant in this market post open of the SPY market, okay, or the futures market, right? The S&P 500 opens at this time, right? So this is the S&P 500 open, right? So this is going to be 9:30 Eastern time or 2:30 in the afternoon UK time. Okay, so wherever you are around the world, you have two times in front of you. Please calibrate this to wherever you are around the world. That is very important to understand. So now that we have the open of the S&P 500, what we are looking for is we're looking in line with the overall higher time frame trend, which is bullish, right? We understand that the higher time frame is bullish. So what can we do? How can we navigate ourselves to position ourselves to take potential buys? Potential buys. That's very important. We're going to be dissecting the power of three, okay? So first, you want to look at our M5 structure. So another question I get is, well, what time frame do you look for entries? What time frame do you look for entries? So entries are taken typically on the M15 or M5 time frame, okay? Yes, you can use the 1 hour or the 15 or the half an hour or the 1 minute, but for me personally, when it comes to strike rate and having a reasonable stop loss, and the M15 or the M5 is perfectly fine. You don't really have to deviate outside these two time frames, okay? So now that we look at here on the M5, what we're looking for is a clear shift in market structure for us to go bullish. So our shift in market structure occurs over here. So this was our shift of market structure over here. So this gives us a clean break of structure, a clean boss. Okay. So if I label that with a boss, this indicates a shift in market structure. Okay. So let's just have a quick recap of what we've done so far. So we have the live price action here, and we're going to go through a schematic to help you explain what the market has done. So we started over here with an Asian range, a low volume time of day. What we've seen is we've seen a sweep of the Asian low and we've rallied up to sweep the Asian high. Now we've had a very aggressive break of structure, right? In the form of an NFP. NFP very aggressively swept the Asian low. Typically, the markets don't sweep liquidity points as aggressive, but this was NFP, so it's reasonable to expect that. We had a very large down candle representing NFP. And now from here, we're just following our structure. So we had a high, a low, a high. We had a low near the market open, near SPY open, and we've had a break of structure, right? So now we're in a region where what we see is we see an accumulation in the form of the Asian range. The Asian range gives us an accumulation. Yep. We see a manipulation in the form of the Asian high. Manipulation phase one in the form of the Asian high, represented with a yellow box. Yellow, not purple. And we see a Judas swing below here, down here, right? This is our Judas swing or our low of the day post NFP. So the low of the day, LODT, right? Low of the day represents the Judas swing. So the Judas swing occurs at the low of the day. So these two things can be these two phrases can be used interchangeably, the low of the day and the Judas swing. Both of them correspond to essentially the same thing. The Judas swing is the last manipulation phase of the market, right? So this is how we identify it using basic ICT concepts. Okay, so in order for us to validate our Judas swing, we must have a break of structure above or below the Asian range. Sorry, in this case we're bullish, so we want to look for a Judas swing below the Asian range to represent that manipulation. Okay. So after that, we see a break of structure to the upside, and that's what completed our bullish day. And then on Monday, we look to see a continuation of that potentially. Okay, so this is essentially power of three and how it works, right? We start with an accumulation, we head over to a manipulation, and we end up with a distribution. And simply the distribution, simply put, is this over here, the expansion to the upside. The distribution occurs after an accumulation and a manipulation, right? So this is the distribution, right? Or a bullish distribution. And this is essentially the power of three, right? Distribution, right? So this is the bullish distribution. This is essentially how markets work, right? This is essentially how markets work using the power of three. So the power of three is a concept that can be used on multiple asset classes, whether it's forex, crypto, futures, indices, etc., etc. They all follow the same narrative of the power of three. Okay, so this is the power of three in a bullish market. The same will be true, just flip on its head for a bearish market, where we look for the high of the day above the Asian range if we're bearish, right? But because we're bullish, and of course the S&P 500 is bullish, we're going to be looking for a power of three in line with the overall trend, right? So the key takeaways from today, right? The key things you want to write down in your notes, the key things you want to write down. So the first thing is you want to understand the Asian range. The Asian range timing, right? I get this question a lot. So it's 8 p.m. to midnight Eastern Standard Time or New York time, right? So that's the first thing you want to get down in your notes. That's the first thing you want to get down. The Asian range starts the day. The next thing you want to understand is that when you're bullish, right? When you're bullish, the Judas swing occurs below the Asian range, right? It occurs below the Asian range. That's important to understand. The Judas swing will occur below the Asian range, okay? If we were bearish, the Judas swing will occur above the Asian range. And the Judas swing coincides with the low of the day or the high of the day. The next thing to understand, or the last thing to understand, is you always want to trade after the news. So whether it's FOMC, CPI, NFP, you always want to trade after the news events, right? Because you don't want to get your account slipped or anything like that. And you want to avoid being in the manipulation phase. You want to be in the distribution phase over here, not the manipulation phase. And the best way to do that is to trade after the news, such as NFP, FOMC, PPI, and CPI. So all of these very dramatic and volatile news events you want to stay out of. You want to stay on the sidelines, and you You want to let the news integrate itself into price before you take any potential positions. And that is how the power of three essentially works, right? The power of three works in this way, right? Accumulation, manipulation, and distribution, right? So you want to make sure you look for manipulations after the news event. And that's like a trading hack. That's a big trading hack that I use, right? And it's more of a, yes, it's a trading hack, but it's also a discipline hack as well. It's also a mindset hack to make sure that you have the patience not to FOMO into a position, and you have the mindset not to hesitate out of a position if it presents, right? So we saw a very dramatic push to the downside. But what we're looking for, we're not going to hesitate. We're not going to go away from our high time frame bias, right? Even though we've had such a massive impulsive counter to the downside, we understand that we're looking for our breaker structure and a bullish distribution, right? And that's how you frame power of three on ES using NFP to your advantage. So if you like this video, give it a like, give it a thumbs up. Just a quick heads up about Liquid FX. We're offering free one-to-one sessions in the community for less than for £35 a month, right? Free one-to-one sessions once a week. You get to sit down with myself for 45 minutes or so, 45 minutes, half an hour, 45 minutes to an hour, and you really get to dissect any of your questions. You get Q&A sessions, you get 24/7 access to the Discord, you get a full PDF course and everything that we've outlined to help our traders succeed within the Discord, right? So if you're interested in that, give us a DM on Twitter or Instagram, and I look forward to seeing all of you in the next one.